So the Prime Minister, Mr. Carney, set for that meeting with President Trump. John, what do you think we can look out for here? I mean, there's going to be a certain amount of political theatre if we know the way President Trump likes to operate.
Yeah, well, I think it'll be complete political theater, quite honestly. I mean, I don't envy Mark Carney going into that room, especially if they do the gang up thing like that we've seen with, some other leaders where it's not just Trump, but you also got, J.D. Vance and Marco Rubio and the whole team in there sort of ready to pounce. So, okay, it's going to be a tough one to negotiate for now. But, I think Mark Carney, as a businessman, he understands sort of, what he's got to do to, with Trump and then how he's got to deal with him to move forward. And in the very short term, I mean, you don't disrespect, you go in there, but you put something on the table, you offer, because you look at it from Trump's point of view. I mean, he's talked a lot about these trade deals. So far, he's got nothing to show for it. He's got no actual trade deals, and trade deals take a lot of time. So he needs some win, something to show. I think the best win that Carney can offer on the other side is really go for something on border security. I mean, this is clearly a big issue in the U.S. And it's from Canada's point of view, yeah, I mean, we can sort of go to, joint task forces, whatever you need to do to, improve that. I mean, fentanyl, let's face it, it's not really an issue of, from Canada and into the U.S., but they want to make it an issue, sort of go along with that, because in the short term, we are so much at risk because we're still too tied to the U.S. I mean, and you look at, we're sort of the first on the firing line when they start pulling back. And the companies are not doing the big spending that Trump wants. They're not shifting the big capital expenditures in the short term, just moving things around a little. Look at last week. I mean, look at, General Motors, what are they going to do? They're not going to move production necessarily to the U.S., but hey, they can shut a shift in Oshawa, and they did another one in Ingersoll a couple of weeks ago and moved some production of that into the U.S. So, we're very much at risk, Canada, in the short term. I think economically we're more at risk. So we've got to. It's a two-part thing. You go in there, sort of play nice, try to get something on border security and see if we can get some of these tariffs down in the short term. In the longer term, we've got to diversify a little bit because, even after Trump is gone, I mean, clearly he got elected on more of a populist view in the U.S., which means, look after our own economy first. And I think that's a sign that Canada, over a longer period of time, has to diversify away from the U.S. And I think what we've got to do is switch more to, a global picture, east to west movements in our natural resources, as they talked about, whether it's pipelines, whether it's rails, whether else more development there, go strong on this hewers of wood and drawers of water, and then, redevelop our own technology business, let's get more Shopify's out there. Let's get more, Atkins Realis guys who can do, nuclear reactors, and we have expertise in that to show on a global basis. These are things we need to develop. In the short term, we got to play a little nice in order that our economy doesn't get decimated by this trade, because we're in the firing lines right now. We're taking the hits on the autos, on the steels. These are huge for us, and we've got to, he's got to bring something to the table to ameliorate that in the short term. And certainly, don't get into the name calling thing. Don't even bring up the 51st. I mean, that's not going to fly. But let's not make that, the main topic of discussion.
What about Canadian bonds, John? Do you have any thoughts? We'll put up a 5-year chart maybe for the Canadian 10-year bond yield. Are you tempted to put new money into Canadian government debt right now?
You know what, Andy? I'm fading this stock market rally right now. We've been selling into it. We bought, in that weakness about a month ago, but I'm not a big believer. I think we got a lot of economic risk in the short term because of the tariffs, and I think the stocks are just assuming too much good news, because they're backward looking in terms of, the tariff impact and all of that. So to your point, what looks better to me? Bonds, absolutely. We've been adding to our U.S. bond position through the TLT, which is the long-term Treasury ETF, because you're looking at a 470, 480 long-term yield right now on bonds. Even Canada, 340 to 350 for long-term bonds. It's a pretty good price, because the only thing, we got to invest on what you think, what you know, or what you think you know. And what I'm pretty sure I think I know in the short term is that economic activity is going to be lower over the next couple of quarters because of these tariffs. We're getting a slowdown. We've had a great run. Fiscal spending is not something we can lean on in the short term because they've already leaned into it such a large degree, particularly in the U.S., but in in Canada as well. I don't think there's a monetary accommodation necessarily coming, but inflation is, coming down. Economic growth is coming down. That means interest rates are going to come down. And at the long end is the way you can lever that into the best. Plus, it's a great hedge for the stock portfolio. You don't have to go out and sell all your stocks, because who knows? There's some great short-term momentum and the good technicals in the market. It might go higher. I don't know. It's just because there's no real immediate negative bad news, in this current earnings season. But what a great hedge for the portfolio is, long bonds. And, the 60-40 portfolio, Andy, it's not dead. It's, and I think, yes, in 2022, it was awful because everything went down, and then it hasn't acted as well in the past couple of years necessarily. But, I think there's still room for bonds in the portfolio. So don't forget about them. They're a great hedge against, the stock moves. They're a great hedge against an economic slowdown, move to lower inflation, and probably some ultimate ease from central banks, not just the Bank of Canada, but also I think the Fed will start cutting rates later this year, not because they are harangued into it by Trump, but because they have to, because economic growth is going to be slower and because inflation will have, come down into the range.
John, great hearing from you. Thank you very much indeed.
Always a pleasure, Andy. Have a good day.
John Zechner. Coming up.